Welcome everyone here to the TRU Capital Q1 2025 webinar, going over the digital assets landscape as well as the markets and what we expect here from quarter one going into quarter two, and really our outlook here into 2025. Really, what we're really excited to do here is to share with you the insights that my partner and I have really gathered, not only being in this industry for over 10 years, but specifically, there's a lot of developments going on in digital assets right now, and we couldn't be more thrilled and excited to share this with you. So let's go ahead and dive in. Now, big disclaimer here, everything that we talk about is for educational purposes. Yes, we do have a hedge fund. That's what allows us to help investors actually invest alongside with us. But everything that we talk about here today is mostly for education. There are risks, obviously, associated with investing in digital assets, whether you're investing with us or not. And so just with that being said, this is not a securities offering or anything like that, and always do your own research before investing. So with that said, the agenda here today, what you're really going to be hearing from is not only myself, but also from my partner, John. So you're basically going to meet the team, okay? You're also going to hear a little bit more about where we're seeing digital assets really go, where the market currently is, and the developments that are happening right now, the progress of mass adoption in this space, which has been happening very rapidly, which we're going to cover. But then we're also going to be covering the sectors that most investors are missing and they're overlooking. See, everyone's attention right now has mostly been on Bitcoin, but there's other sectors that if you don't pay attention to, you could potentially miss a big shift. And we're going to cover that here today as to the sectors that people are overlooking. We're then going to go over our investment thesis and strategy, especially with our outlook going into 2025. And then lastly, we're going to go ahead and have a Q&A at the end. And so if you have questions throughout this webinar, definitely jot them down and you can put them in the chat section here. My assistant Kim is also on this webinar, and she'll go ahead and make sure that we do see those questions, whether they're for me or for my partner, John. Okay. So with that said, let's go ahead and hop in. If you guys don't know me, my name is Robert Miller. Sometimes you'll see me online as Robert J. Miller. And a little bit about my story is that I've been in digital assets and really crypto since about 2015, 2016. So yes, I've seen Bitcoin under $1,000. It's kind of crazy now that we've seen Bitcoin over $100,000 just a few months ago. But I've been involved for a very long time. Not only that, I've also been involved in digital marketing, social media marketing, and I've built multiple companies. And so seeing all of the news that comes out around digital assets is something that my partner and I love to do, but I've specifically looked at it always from a marketing perspective and seeing what they're saying versus what the big banks, the institutions, et cetera, have been doing. And so it's been very cool to see that stuff start to line up now, whereas in the past, it used to be a big lie and then they would really adopt things on the back end. And so really with that said, John and I started this fund because of our passion for digital assets, and because I have that business background of building multiple businesses, we were able to put something together really exciting. Now, like I said, I've been a lot more on the marketing front, but I've seen Ethereum under $88, Bitcoin near 1,300. I actually gave a talk in LA just a few short months ago, which I just reposted on my X recently, or Twitter, whatever you want to call it now. Basically going over where Bitcoin was headed and where digital assets were headed. That presentation, Bitcoin was at 59,000 and then peaked at 89,000, then 106. And so we have a very tight nose on things, a very tight, I would say, investment thesis on this as we follow this very carefully and as things change. I've also had in this studio individuals like Gary Cardone, which many people don't know is Grant Cardone's brother, on the podcast discussing Bitcoin and going over what's really happening rather than just seeing price move from A to Z. Now, I do want to hand it off to my partner, John, here now. Before he actually hops in and tells you a little bit about his background, not only is it very impressive, but his insight on digital assets is very refreshing. And so he's not going to be one of these crypto bros. He's coming from an institutional background. And so it's a very different and more professional type of communication around digital assets and investments compared to potentially what you hear on Twitter. And so, John, I would love to have you kind of share a little bit more about yourself and your passion for digital assets.
Sure. Thanks, Robert. Well, first, I'm very happy to be here. This is a very exciting time to be in the digital asset space and to be discussing these things with you all. So, as Robert said, my background, I come from 6 years on the Aladdin platform at BlackRock. For those who don't know, Aladdin is BlackRock's proprietary asset management software platform, and there's over $35 trillion of assets under management on the platform. So, most of the financial assets in the Western world in some way touch that ecosystem. I helped out with the integration that we did with Coinbase while I was on that platform. And so through that, I got to work a lot more closely with the digital assets team at BlackRock and really got to understand the firm's sort of long-term and broad strategy in the digital asset space and got to be part of those conversations as that strategy was developed and as it's been put into practice. So that's been very exciting. I've also just personally been involved in digital assets for nearly 10 years at this point, which Robert and I both were talking about recently, how long it's been, what an amazing journey it's been. I remember when Bitcoin crossed $100 for the first time, and it recently crossed 100,000. So it's still just getting started, but it's an exciting time to be a part of this and to see how institutions, as Robert said, are beginning to treat this asset class seriously and move a lot of their existing businesses, which we'll talk about more later, into the digital asset space and onto these rails. So we see this as an enormous opportunity, and I'm excited to be part of this and to be here to talk with you all about this today.
Yeah, absolutely. And if you guys haven't heard or seen John too much, he actually just left BlackRock as an executive about a month ago. And so now is really his roadshow. And you will see a lot more media coming out of John. And just recently, probably what, 1 or 2 days after your departure from BlackRock, we both got invited, but he got invited to speak at a digital assets panel for family offices. And guys, this room was probably $1.5 trillion of wealth in the room. It's probably one of the biggest rooms that I've been a part of, and it was a blessing to be there. But John actually spoke on a panel with other VCs and other family office allocators to digital assets. And so, if you want to take a quick screenshot of that little link there at the bottom, you guys can go ahead and see an additional panel review of where digital assets are going, and he freaking crushed it. So many people loved the presentation, so you definitely want to check that out if you want to hear a little bit more about John's perspective on digital assets outside of today's. But really, him and I came together about a year and a half ago, and so the story about TRU Capital is that I actually started this process of building a fund officially back in 2022. Prior to that, I was actually involved in trading cryptos for people. I actually helped a lot of people in my hometown do so. But I was really early on into investment management, into managing people's money. But through this process of becoming more formal, becoming more legitimate, and us really going through the paperwork, the legal, and all of that stuff, John and I's paths crossed because there's not too many digital asset emerging fund managers that are doing things legitimately here in the States around the time that I was doing it. Most people were going offshore, and yeah, we considered doing offshore vehicles in the British Virgin Islands and other places like that. But we really wanted to be domestic, and just through friends of friends and connections, we got together. And so we've done multiple events together. I've gone to New York multiple times. He's actually given me a tour of the BlackRock office. Now, for those that don't know John, because it was news to me, what's the little hidden gem there? I think it was on the eighth floor in the New York BlackRock HQ.
I'm actually not totally sure what you're talking about.
It
You want
had
to give me a hint?
it had the Aladdin thing. It had a bunch of history about BlackRock, the whole showroom.
Oh yeah, yeah. The we have like a reception area on the that floor where we have a bunch of the history of the platform and the development of the Aladdin space. Yeah.
Okay, he's underplaying it, guys. This thing's like a museum of BlackRock inside of BlackRock. It is really cool. And it was awesome. It was basically what you would picture in the movies, guys. It was awesome for me to see, but full trading floors. You have massive offices of, big asset managers and stuff. So it was really cool, straight out of a movie if you guys are curious. But with that said, guys, it's great that someone's been involved for over a decade or near a decade, but what's been the participation, right? A lot of people say that they were in Bitcoin and that they had 10,000 Bitcoin when it was a penny, but then they lost their phone or lost their wallet, right? But really for us, we've been in digital assets, not just Bitcoin, but the broader spectrum as well. And so I just want to give you a glance at some of the things that we've invested in. Now, this is not an inclusive list, and we're not saying to go buy these right now either. But these are just some of the ones that you guys have probably heard of. We know of a lot that maybe you haven't heard of, but that we've entered in and had great returns on. And so Fetch, which is now becoming more ASI, is an alternative project more in the AI space. It was entered in at around 24 cents. That's when we actually purchased it in our personal portfolio. And at its peak, it was worth over $3. And so that was about a 1,251% gain. Right now, we have a little bit of a pullback. And so we're seeing about a 300% gain since entry. But as you guys see, we've done this with multiple coins, multiple projects just over the past few years. Obviously, Bitcoin and Ethereum, we've been in for a long time, so it's a little bit of an unfair comparison. But a lot of these returns have crushed Bitcoin since the time of entry, just over the past 2 years. And so, really, what we are excited about is allocating to more projects that we see similar potential with. Obviously, past performance is not future guarantee of future results as there's risks, but we know this space very well. And so what we're going to be covering here today is really that state of the union regarding digital assets, where we see things going, and then potentially how you can get involved with us if you did want to join our fund. And so let's go ahead and go over some of the recent developments and updates, as well as key takeaways that we have been getting from the market. Now, if you guys are new to digital assets and you don't know what's really been going on, I want to take the first 30 seconds here just to give you a backstory. So if you've been in digital assets for a while and you know some of this stuff, just bear with us for about 30 seconds. But really, Bitcoin back in the day, you used to have to purchase it directly through Coinbase and really either self-custody it, which is a little complicated for people that don't know how to do so, or they would just hold it on the exchange. This would allow them to move money back and forth, but it was outside of traditional investment accounts. So you couldn't buy it with your Schwab account, your Fidelity account, your Vanguard. You couldn't buy it with your 401ks. You couldn't withdraw that money to go purchase it unless you wanted to pay a lot of fees. And so, what big firms like Fidelity and BlackRock did is they created a way for people that buy Bitcoin, a paper version of it rather, called an ETF in your brokerage account. So you can go to Schwab, you can go to Vanguard, Robinhood, and you can buy these paper products of their ETFs. And essentially, it represents you purchasing Bitcoin, but in your stock accounts. Okay. And there's reasons why people would want to do that if they didn't want to self custody things, if they didn't really understand the rest of the market, but they just wanted to have some exposure to Bitcoin. It's a product that obviously works because when they launched this, it was their most successful ETF launch ever. And BlackRock and Fidelity have launched gold ETFs. They've launched other indices with other equities. But this was by far their best adoption, the largest amount of inflows that they've seen within just a short period of time. Now, within the first few months, they experienced over $50 billion flooding into Bitcoin and Ethereum ETFs. And so, right now in the market, we're seeing more institutions try and copy that strategy. But that's what happened really last year. Okay. Now, what we've seen since that occurrence, we've seen digital asset adoption and investments from high net worth individual groups like Tiger 21, R360, and other family offices. And so, if you don't know what Tiger 21 is or R360, these are wealthy communities and wealthy networks. So, essentially, at a certain point of wealth, you need to essentially be around people that have similar levels of wealth, typically after an exit of a company, or maybe you struck it lucky with some big deal. And so these individuals and these groups review your portfolio and see if you're allocated correctly and if you are missing out on other opportunities that are present in the market. And so right now, the ultra rich is what they like to call these types of groups. The ultra rich have shifted some of their portfolio specifically to this asset class. And they wouldn't do so if they obviously didn't see the opportunity there, but they also wouldn't do so if they didn't have easy interfacing with some of these institutions. And so we've seen a lot of capital rotate into this. And obviously, we spoke at an event just about a month ago, two family offices and two individuals that are taking this sector very serious. And so we're not only seeing it from the individual level, but BlackRock is also recommending that people have exposure to digital assets. They need to have it not only because they have the products now to service that, but they know the return potential coming from Bitcoin and other assets alike. Okay. And so that's really going on right now with the ultra rich. Now, we've also seen this with governments, okay? And governments are adapting this at the federal and the state level. but the US just announced their strategic crypto reserve, where the states have already been creating their Bitcoin reserve, but now the government's going to add other assets as well to really compete in this digital landscape and really for more power in this digital assets space. So we can see here that we have 31 strategic Bitcoin reserves currently underway of being approved in the United States. And then obviously the US federal strategic reserve has also occurred as well. And so we're seeing a lot of adoption here in this space, and it's getting really exciting if you're holding these assets. Now, John and I have been really following this intensely because we've not only met with the people that are, with that legislative movement. It's called the Satoshi Action Fund. We've actually spoken with them. We actually knew a lot of these states were going to get approved prior to the X or the Twitter announcement and stuff, which is kind of funny. But we're seeing some interesting things develop in this space because of that. And so what we're really excited to talk about is where we're currently at in the market. And so, John, I know this is a big question that we get all the time is that, we have this 4-year cycle, 2 years of a bear, of a bull, 1 year of a bear, 1 year of consolidation, and 2 years again. And so, are we currently in this 4-year cycle framework? What are your thoughts on it? Because I know that it's been changing with all of these adoption elements from governments and institutions.
Sure. So I think there's a broad misconception in the digital asset space among people who are crypto native, that the Bitcoin halving cycle is what's driving the swells in price in the bull and bear cycles for Bitcoin. I think if you actually look at a lot of the underlying data for this, you'll see that a much better indicator for this, it's not really correlated to the selling or mining of Bitcoin. It's more correlated to global liquidity. So I think until we see a major shift in global macroeconomic trends that are driving global liquidity, in other words, how much currency is available in the global marketplace and with what degree of friction around that liquidity, until we see a major shift in that, I don't think that these cycles are going to change. So there's a lot of people who think that because Bitcoin has become adopted by nation states and institutions, that the flow of capital in and out of this asset will stabilize, and that will cause these 4-year cycles to end or change in some way. I think that that's possible. I would consider that to have happened if we get like a new all-time high in 2026 or 2027, or if in this cycle in 2025 we break a weekly candle that closes below 60K. I think that either one of those would constitute a break of that structure. But for right now, we're well within the historical patterns that we've seen, and the influx of liquidity that's recently been injected by the Federal Reserve and China in 2 to 3 months will also matriculate into risk assets, and you're going to see Bitcoin return to keep following this pattern going forward. I don't know if this cycle will ever break. I'm interested to see if it does, but for right now, we're still within it. So I think until the pattern is broken, it's a good rule of thumb to guide you going forward.
Yeah, absolutely. And that's something that him and I do agree on, but we are watching right now very carefully because we're seeing mass adoption that we haven't seen before, right? So if anything was to break this 4-year cycle, it would be with all the things going on currently, because it is pretty noisy in the market right now, and we're here to help give you some signal to that. But this is something that a lot of people are talking about on social media, so we did want to cover here today, that we do still believe a 4-year cycle is occurring. And with these developments, I do think that we'll probably see it potentially just extend. So it may not be 4 years to the dot, maybe 4.5 years, but the overall flow of how this market will move, like John said, is going to follow global liquidity. And if those cycles continue to pan out, we'll continue to see the 4-year cycle really rise and fall as we've seen in the past. But let's talk about where we're at currently in the markets, because sometimes it's great to zoom out first, but there's obviously a lot that's been going on right now in current markets that's causing some fear. It's causing some sell-offs, and I want to give you guys a little bit more of my perspective on it, because it's obviously going to be correlated with other assets. So right now we're obviously seeing a big tariff sort of shakeout when it comes to Trump with Canada and Mexico, but then also with other countries around the world. And that obviously creates uncertainty for companies being able to, predict whether they want to invest heavily here in the States or whether they want to invest offshore, or whether they want to, move their money elsewhere. And so about a couple weeks ago, we actually called a cycle top in the stock market which stocks is one of the most liquid markets here, obviously in the United States. A lot of the other assets are going to be correlated to it because the sell-offs are indicating other macro events. So Bitcoin is not necessarily one-to-one correlated with the stock market, but it's a good indicator to see where investors are seeing risk and where investors are seeing liquidity move. And so we called that top. I've actually taken a couple shorts in the stock market, et cetera, that have panned out very well since that cycle top. But we expect, not just from looking at the charts, but also from some of the interest that we've seen in the market, that this may continue for the next 3 to 6 months, where we do see this pullback and this downturn. Given that on the bottom right here, this white chart, it's showing the amount of volume of put options. And put options, if you guys are unfamiliar, put options are essentially where people bet on the stock market actually going down in value. And so when it goes down in value, people will like to put a trade on that position. When people put a trade on that position, they open up that put, and that's what that chart is showing. It's showing an increase in the volume of puts that are occurring in said market. Okay. And so when that happens, that obviously shows the sentiment of investors and where things are potentially currently headed. We've also seen that the Fed has revised down GDP by nearly 3%. Okay. And that is largely due to tariffs and the fact that we imported a lot of production here in January. And so, with a lot of these markdowns, with a lot of this sell pressure in the market, we're obviously seeing that occur in Bitcoin and digital assets as well. Okay. But we're going to show you some sectors that we believe that are poised to not only weather that very well, but also that will rise and catch up in regards to price to where they should be because of their fundamentals are extremely strong. Okay. And so we believe that this is a bit of a short term move with kind of Trump's craziness right now when it comes to the markets. But there are sectors that investors are overlooking, and that's what we're really going to be talking about now. So, John, can you go ahead and share with us here what we're looking at when it comes to this graph and this bullish sector that we're going to be talking about here of RWAs?
Sure, absolutely. Thanks, Robert. So what this graph is depicting is the digital asset space broken down by different sectors within it. And as with any market, any industry, there's a number of different players in different sectors. The distinctive here is that real world assets is showing a significant outperformance against every other sector in the space. The reason for this is that a lot of the business, the assets, the economic models that are driving value to digital assets that would fall into the category of real world assets, RWAs, they already have long-standing and proven robust business models and drivers of economic value. Whereas a lot of these other sectors are either blue sky, in other words, like completely new marketplaces, completely new offerings, or they're trying to compete with legacy systems, Web 2 systems, to try to bring users into a new economy to adopt a new product where they already have a product somewhere else. So in that sense, there's a strong differentiator here because the real world assets that are coming into the digital asset space have, like I said, robust and long-standing business models and drivers of economic value. So they're going to be already set up to perform well, and that's one of the things that's differentiating them from the other sectors in the digital asset space right now. Yeah, so I think that's what I would say on this slide here.
Yeah, absolutely. And for those that may not fully understand what real world assets are and what that means as a sector, it's a type of tokenization. Okay. It's a type of way that things are being upgraded. Okay. So tokenization is essentially bringing any type of financial product onto the blockchain. So stocks going onto the blockchain, bonds, real estate, commodities, they're all coming what's called on chain. Okay. And so essentially, what it's allowing people to do is to minimize all of the friction between you and owning that stock or that bond or that piece of real estate with all the paperwork. Because we're in a digital economy now and it's becoming more and more digital, it's essentially making these assets that are old, clunky, or have an old infrastructure get upgraded to a digital economy. And so we actually just saw the World Economic Forum, and I don't really follow them a bunch, but they did make an article about blockchain. It's about time. It only took them maybe 10, 15 years. But they did make an article here in December of 2024 stating that blockchain and tokenization is going to change the way that you invest in financial instruments and invest overall. And so we think and we see this happening right now, but it's my firm belief that we will see most, if not all, of the major indices, the major sectors in investment be on chain and be tokenized because that's where all the momentum is going right now, which we'll go ahead and show you. Okay. So, what you're looking at is these metrics are showing how much money and how many of these things have already been put on chain. Okay. So if we look at the top left and we go down from the top left and then go to the second column, stable coins are essentially one of the biggest trends that we are seeing right now in 2025. Stablecoin adoption and stablecoin infrastructure showing that one USDC coin or one USDT coin is equal to $1. Okay. We're seeing regulation come into the space. We're seeing a lot more adoption come into that space. But what that's allowing them to do is then tokenize the things that surround the dollar, right? So I can go put $1 into my Schwab account and buy a stock, or I can use USDC and I can buy a tokenized stock. Okay, that's exactly what they're doing here. And so we're seeing that across the board. We've already seen 14 million of stocks get tokenized. We're seeing 123 million of bonds get tokenized, about 4 billion of treasuries. So the US government, when they give the T-bills, when they give their treasury bills out, they're now doing that on chain. We're seeing that start to occur through a lot of the projects that we're taking a close look at and investing alongside with. We're also seeing private credit, which is a really big sector in the finance space, come on chain as well. And same thing with commodities, commodities being oil, gas, corn, that kind of stuff. Okay. All of this stuff is becoming digital. And so there are players and there are platforms that facilitate this growth. And that's why you saw on the last slide that RWAs are essentially outperforming the rest of the crypto ecosystem because they actually have real utility. These aren't projects that are, like John said, infrastructure plays for upgrading from Web 2 to Web 3 on a meme coin or, fake utility around some weird project. Like these things are actually taking the old world and bringing them to the new world. Okay. And so to talk more deep about that, we're going to highlight one project that we've had our eyes on for over a year now. We've been in about for a year and a half. And so we're not telling you necessarily to go buy this right now or anything like that. But this is the type of stuff that we do and that we follow. And John was actually the one that put me onto this. So I'm going to give him his flowers and let him take the show here.
Thanks, Robert. Yeah, so just a couple things I'll add to what you've already said. The total addressable market for real world assets, I think, is beyond the let's say the normal scope and scale that most people are mentally able to comprehend, just because of how large it is. So just to like quickly touch on a couple of those things, the global real estate market is 275 trillion. The global equities market is 300 trillion. The global derivatives market, which will also be brought on chain, is somewhere around 450 trillion dollars. The bond market is 400 trillion dollars. So what you're talking about here is quadrillions of dollars of economic value that already exists in the world moving on chain onto tokenized rails. And that is going to create an enormous amount of value for the underlying technology that is supporting these legacy assets moving into the digital world. It's also going to lead to enormous amount of trading volume, right? So like right now, the intraday volume on just like foreign exchange swaps currencies, right, is somewhere between $5 and $9 trillion daily. So if quadrillions of dollars of value are moving onto these rails, not only is it going to be securing quadrillions of dollars of value, there's also going to be trillions of dollars of daily value or daily volume that are going to be settling on chain, and that's a huge driver of economic activity, which also produces economic value to the underlying rails that are securing that. So I think just giving an idea of the scope of that. It's like the most bearish forecast that I've seen for the real world asset class by 2030 came from McKinsey, and they said they estimate this will be a $2 trillion asset class. Ondo, which I'll talk about a little bit here in a moment, we think will be one of the leaders in offering this tokenization to the market. They are currently somewhere just under a $3 billion market cap. So you can see there sort of the opportunity for growth, not just for like established public blockchains like Ethereum or Bitcoin, but for platforms like Ondo that are going to be offering this functionality to institutions who need it for their business and for their clients, because it's better for all the stakeholders in this. So to quickly touch on Ondo here a little bit, I'll just say, for the purposes of this seminar, I would highly encourage you to do your own research on this project as well. But I wanted to call out a couple of things here, which is, like we said, Larry Fink at Davos was talking about the need for tokenization. I distinctly remember, because it was one of the most exciting moments of my career in Q3 of 2023. I was sitting about 15 feet away from Larry when he said he sees an opportunity for Ethereum's value to drastically increase, and that the future of finance was tokenization. It was one of the first times he'd said that publicly, and I was very excited about that. So to bring this back to Ondo, there was an event called the Ondo Summit here in New York City. I think it was about a month and a half ago, where they brought together leaders of the chairman of CFTC, leaders from the SEC, a lot of people from the incoming administration, and then a lot of leaders from legacy finance, leaders from asset managers like BlackRock, Franklin Templeton, Fidelity, but then also banking institutions like the Bank of New York Mellon, who has $50 trillion of assets under custody. And they were talking about how all of their different businesses are going to be part of this movement towards tokenization, and how they are working with Ondo specifically on doing this. So a couple things to call out here. Paul Atkins is Trump's incoming SEC chair. He has for a long time served as a strategic advisor to a project called Securitize, which is BlackRock's partner on their BUIDL fund, which you can look into more of that. But it's a tokenized treasury fund that's primarily on Ethereum, but is scaling to other blockchains as well. Paul Atkins, I actually had the opportunity to meet in 2019, and we actually talked about digital assets and how hard it was to be in the digital asset space in America. So I know firsthand he understands this and how important it is. So he's going to be the new SEC chairman. Larry Fink has said publicly that he wants to work directly with the SEC to expedite the regulatory framework to allow institutions to use tokenized rails for their businesses. So he's going to be someone who's leading that charge, and he's affiliated with all of these different players who are working to set up this system. The other person I wanted to mention was Patrick McHenry, former chairman of the House Financial Services Committee, and very close associate of the current chairman, French Hill. But he has said publicly that the first priority for this administration is stablecoin legislation. Now, stablecoins, to just briefly touch on this, they are considered a real world asset. The reason they're so important is that when all of these different things, stocks, bonds, real estate, commodities, all these things, derivatives move on chain, they're not going to settle in US dollars anymore. They're going to settle in tokenized dollars, stablecoins. So in order for this whole system to get up and running, first we need to lay down the framework of stablecoins. So that's the priority that Patrick McHenry is working on. He also is the chief policy advisor for Mark Andreessen's company, Andreessen Horowitz, who shut down their UK office to double down their focus in the United States, specifically to help back this effort. So there's a lot of bullish things happening here, and you have a lot of leaders from the private side and the public side partnering to bring this and establish this and roll this out. And one other thing I'll just say to end on this, at the Digital Asset Summit and at the White House on last Friday, the Secretary of the Treasury said that it is his objective to use stablecoins to drive trillions of dollars of demand for U.S. bonds in the market. So there's just broad partnership, and they all see this the same way. And so this is a thing I think that a lot of people are missing right now. We're seeing all-time highs, or I guess you could say all-time lows in market sentiment, especially among retail, at the same time that institutions have never been more bullish, and the framework has never been so, or the outlook rather, has never been so positive. So that's something that I think we wanted to highlight here, is that there's some momentary volatility in the market, but the long-term value here has never been so strong, and the opportunity risk reward has never been this attractive. I think maybe like two other times, maybe in the history of Bitcoin, has the risk reward ever been so strong here. So that's just a couple things I wanted to touch on about that.
Yeah, absolutely. And when it clicks for people that, hey, this is all going digital, and then there's this whole entire ecosystem built, which is really separate from Bitcoin because it's a different conversation. but seeing real utility is what the crypto space has really been missing for a long time. Because most people would say, oh, this is just a meme coin, this is a speculative bubble, this is that. They would throw a little bit of shade towards any of these projects, which to their credit, some of them were just really bad projects with just weird names and just weird dogs and stuff like that as their icon. But when you have an institutional viewpoint on, looking at this sector, the big boys get involved and they get involved and they move fast. And with a regime like what we have right now in the United States, we're going to see this industry be fast tracked faster than we've ever seen. So the urgency of getting exposure into digital assets, this little sell off right now is a blessing. For a lot of the positions that we want to allocate to, number one, but two, if you're just wanting to, buy some Bitcoin on your own, this is like prime time, as John said, one of the best risk to reward trades that we're seeing right now is getting involved in digital assets and getting involved while short-term sentiment is, kind of blood in the streets and where there's a little bit more fear. Right now is a very good time to act to get involved. And when times are going good, we trade this stuff as well. This isn't just buy and hold the bag, only go through the downturns without any, potential alpha there. I've taken trades on Ondo specifically through its ups and its downs. Okay. So there's opportunity in all fronts of this. And so a lot of people, they'll just see, red on the screens, but they don't know how to take advantage of it, when to buy, or even if it's a good time to buy. And, quite frankly, these were just a few trades that were taken and within 3, 4 hours were closed. And so when you see opportunity like that, I get excited and volatility becomes a blessing because you're able to actually have these types of trades very, very quickly. And so I want to kind of back up a little bit and give you guys more of our investment thesis of what it is that we're doing and why TRU Capital was really funded and created to essentially help you as an investor, as a pioneer in digital assets, potentially, if it's the first time or if you're the first one in your family doing it. We're essentially a net long fund that's focused on accumulating more Bitcoin over time with our alpha coming from some of these alt positions like we were talking about in RWAs and a few other sectors that we're bullish on, a little bit of trading and really some cool algorithmic technology that I'll be covering here in a little bit. But just to kind of lay the foundation, if you have some digital assets right now, I want John to go ahead and share this because I think this is one of his favorite parts of our thesis. And anytime that we talk about it, he lights up. So John, I'll pass it over to you.
Yeah, I think that there's just a lot of people who outsmart themselves with this. They get too excited. They go chasing things that they shouldn't. Look, the digital asset is marketplace. The entire industry is now just under, it's like $2.75 trillion. Over the next 5 to 10 years, this asset class is going to swell towards $100 trillion. And I don't know, that's not an exact target, but like in this bull run, I think we'll see somewhere between $6 and $12 trillion. But then the next bull run after that, it's too hard to anticipate how big it's going to go or how quick, because we've never seen anything grow this fast, right? Like Bitcoin is just as one example. Bitcoin's adoption is growing at twice the speed of the internet. The proliferation of digital assets that we're going to see in the coming years is going to be something that we've never seen before in the financial asset space. So I think it's just about not outsmarting yourself. You don't need to go chasing crazy, risk in DeFi, doing 100x longs. We're going to use our algorithmic trading software, the proprietary stuff that Robert will show in more detail later, to outperform in a bear market or in a crab market. But the real goal here is to acquire high quality assets, hang on to them, and don't miss that broader movement of the entire space from a $3 trillion to $100 trillion asset class.
Absolutely. And if you do try to trade this market, you really have to know what you're doing in order to find some alpha. So for most people, just holding the right digital assets will help secure a real big upside for them. It's really when you're working with professionals that have algorithms and are, doing trades the right way, that essentially can, layer that into the strategy. But we're very bullish on simply just hodling some of these big projects that we want to allocate more to. And so really a lot of people ask us then, well, if your goal is to hodl and acquire more Bitcoin over time, how are we going to do that? Right. Well, there are a few allocations that we want to have in some of the major coins. So Bitcoin and Ethereum will probably comprise anywhere between 45 to 50% of that portfolio. because market cycles swing with liquidity. So we want to time our allocations and rebalance portfolio when we feel it is correct to do so and when it's our obligation as a fiduciary to do so. But really, the other area of the market, that additional 35 to maybe 40% is really where our advantages really come into play. So we do like to trade spot positions. And what I mean trade in that example, we're usually looking at those with an entry and an exit in mind. And that's really coming from not leverage, that's just really coming from entering with X amount of money into a position and taking out our gain along the way. And those are called spot positions, where there's no leverage or anything like that. Over time, as we see fit, depending on what cycle we're in and depending on where we're at in markets, we're going to leverage our algorithmic technology. And we'll show you guys what some of that looks like and what that has done over the years, because it's been very impressive and it's one of the parts of our fund that gives us a lot of alpha. Okay. And then the remaining last portions here of 10 to 15%, we're going to look at allocating those to alt projects that come up in the cycle. And so Ondo is a very good example because technically it came on chain and it was live about a year and a half ago, and that's in this cycle. Okay. But a lot of these projects that we've picked up when we picked them up early have beaten not only Bitcoin and Ethereum, but have produced over 100% per year when you annualize it over 2, 3, or 4 years. And so we really want to obviously make money in a bull market by doing that, but then our algorithms can help us when markets are sideways or going down like right now, which they've been very helpful in doing. And so if you want to learn more about this, we'll give you an option to be able to contact us and book a call to learn more about how we want to allocate. But from a representation standpoint, this is where we thrive, this is where we shine, and we want to continue to allocate more Bitcoin by leveraging our strategies. Now, one of those strategies is this algorithm here. When we ran it from April 2018 to January 2022, if you had simply just bought Bitcoin and held it, you would have made 60% on your money. Not a bad return over 4 years if you compare it maybe to stocks or maybe to bonds or maybe gold. But when you compare it to what we did with our algo, I mean, it's peanuts. It's very, very small. We did over 3,410% return with that algorithm. No leverage, no, nothing insane like that. Mostly spot trading. Okay. And so this is one of the algorithms that we leverage, and it's used specifically in different times of the market. But it really helped us accumulate more Bitcoin over that 4 year period, or that 1.5 year, 2 year period, to then allow us to take advantage of a cycle top in the right way. Additionally, people ask us all the time, what do these things look like on the back end? Well, this thing makes me super happy whenever I see these colors, whenever I see this stuff on the screen, because it is very sexy in my opinion. A lot of people, when they see this, they kind of have deer, eyes and, deer's looking in the headlight kind of approach when they see this stuff. But I love looking at these types of algorithms. I've probably studied over the past 3 to 4 years dozens and dozens and dozens of algorithms. We've developed our own. We've seen a lot of what's out in the market. Nobody has the type of technology that we have. That's part of me spying on other technologies and seeing what's out there. But this is really where the alpha comes from. And so if you're trying to compete with our algorithms, I'll just tell you, like, you're not going to outperform our algorithms because these things are scanning all the time and they're entering positions without even us touching a keyboard. Okay. So when people go to approach these markets, you also have to see, like, do you have the right things to even compete? And this allows us to not only compete in the market, but also outperform it in some regards. Okay. And so there's the other two parts of our trend, or of our thesis rather, that we like to emphasize. If you are going to be doing this on your own, just don't mess this up. Don't botch it. Don't have a bunch of leverage. Don't 100x onto a meme coin. John, take it from here because I know you love to talk about what not to do alongside with what we do.
Yeah, so I think I started to get into this a little bit before, but for me, human error is the enemy here, right? Just don't outsmart yourself. Some of the examples of like spot positions that Robert were talking about, like I bought Solana at $10 because I knew, hey, this is way undervalued. Like FTX going down does not have anything to do with the long-term viability of this project. So that's when I made an investment, and I exited when it got back to its all-time high again, right? So like that's an example of like something I trust myself to do, like something over a multiple year time horizon. and Robert is much more enthusiastic about the trading. But for me, the big differentiator about this thesis is that we're bringing institutional grade algorithmic trading software to take some of these positions, capitalize on these opportunities in a bull or a bear or a crab market, so we can still generate returns with LP capital without having to do a lot of these other things that funds do that end up losing their bag, losing investor capital, and ultimately messing up the opportunity here. So we're not going to be doing a lot of these things. We're not going to be doing 50x longs. We're not going to be chasing crazy yield in DeFi. We're not going to go invest in, $1 million market cap projects that have no proven market value yet. We're not going to be buying Pepe coin. We're not going to buy NFT projects that famous personalities launch and tell you to have fun with. Right? There's a lot of noise in the digital asset space. There is a lot of opportunities to make some mistakes here, and a lot of big projects have. Like Celsius was a multi-billion-dollar business. They started chasing yield in Badger DAO, trying to get 20% APY. There was a hack. They lost their coins, and they had to take more risks to try to catch up with the losses, and then they lost the whole operation went down. We're not going to do these things. We are going to take positions in, like, an example would be Ondo, right? We think they're undervalued. We're in a bull run. We think there's a return there. We'll take a position, but we're not going to be trading in and out of it every 15 seconds. And we're not going to be doing a lot of these things that wind up, this is what a lot of investment managers will do, thinking that they're smart, thinking that they know the future, and it won't happen to them. Hubris takes over, and you make mistakes, and you lose investor capital. So we're not going to be doing any of that. The thesis here is very simple: trust the proprietary algorithms that are investment grade or institution grade trading software. Trust the process. Don't outsmart yourself. Don't fumble the bag, right? And just ride this asset class as it moves from 3 trillion to 100 trillion. And then use the algorithms along the way to accumulate more of these high quality assets, and don't miss those opportunities. As Robert said, I think that there are a lot of people who will tell you, oh, you can maybe outperform if you want to just do a buy and hold on Bitcoin and a ledger or an ETP, if that's all your appetite is. I can understand that. But I think that this is a much bigger opportunity than just holding spot Bitcoin. And so we want to bring that opportunity to investors, while at the same time insulating them from a lot of these other risks, and just keeping your investment safe as you get into digital assets. So that to me is one of the most important things about the TRU Capital thesis. I'm deeply passionate about not doing these things. So yeah, that's my 2 cents on that.
Absolutely, man. Absolutely. And so one of the sayings you'll hear from John a bunch is buy the truth and sell it not. So again, to recap this thesis is accumulate the right tokens, dollar cost average at the right times, and protect it with great custody. So again, like you said, if you're trying to do it on your own and you want to buy and hold Bitcoin, we think you're going to miss out on a lot of alpha if you only do that. But even if you do that, just buy Bitcoin over time and self custody it. That way you have, your keys, etc., and you have it protected. And so, we're really going to be, you're going to be seeing a lot more of this thesis and really a lot more of the details behind it in that Q1 digital assets report that we're going to be sending to you at the end of this, webinar. So definitely be checking your inbox for it if you want to learn more about how you can continue to do that alongside us, or even just by yourself, because it's a really important part of our thesis. Now, when you go to look at digital assets as a whole, there's different approaches to take. We've talked about that you can be doing this on your own. We talked about that you can be, having exchange traded products, ETFs, ETPs, et cetera, to actually get exposure to this. And those things have done well. I'm not going to say that, don't just have Bitcoin or a portion of your portfolio in Bitcoin, because I've done that as well. And it's done extremely well over the past 5 years. But the reason why I've started TRU Capital alongside John is because we know what's happening in the market, and there are many investors that are not allocated appropriately because they're only taking the Bitcoin approach. And so over the past few years of us together, John and I, in our personal portfolios and with these algorithms, we've outperformed Bitcoin. And by doing so in the digital asset space, you have to be very smart. You have to have the right infrastructure behind you. You have to be able to actually execute on the strategies and also have great information flow. And so this is exactly what we do here at TRU Capital, where you probably don't have the time to do that on your own, right? If you just open up Bitcoin Twitter, you will see thousands of posts all about crypto, trying to decipher all of that noise into the right signals. And if you're not really experienced or even have an institutional view like John does, having worked at BlackRock for years, understanding the stuff behind the scenes that's going on before it even hits Twitter, like that's the stuff that we do research on and we dive deeper into. And the best part is that this doesn't require any of your time when to invest alongside us. The biggest thing that we always get asked though, when we do this stuff for our clients, not only are you getting the updates and you're getting the reviews that we do, but it's how do we ensure that things are kept safe? Because as soon as you send crypto or as soon as you send money into a fund, you want to know how it's structured. And so the biggest thing that we actually offer our clients that not a lot of people really know about is third party custody through a platform called BitGo. And they are one of the largest custodians that are registered, they're compliant, and they provide a lot of assurances to not only our fund and for our LPs, but for many people that are positioning big lump sums of investment capital into digital asset funds. There's only a few custodians like them out there. BitGo is by far probably the best one in our opinions. That's why we've partnered with them. And they essentially help us keep crypto secure and not just from a technology perspective, but also from a legislative and registered perspective as well. So alongside working with us, in order to have hedges in markets, low time commitment, leverage our algorithms and our experience, this is why we've created TRU Capital overall. And so a lot of people then ask us, how do we get involved? What is the target raise and how is it structured? Well, right now we're currently doing a $50 million raise. It's expandable up to $100 million. But with our fund, we're limited to 99 investors. And so the minimum commitment right now is 250,000. The commitment period, whereas as soon as that's sent in, is a 1 year lockup. After that, you can redeem your capital every 90 days if you wanted to, or you can, provide more capital and we'll allocate that in the markets for you. But a lot of people ask us about really fees and how do we essentially help you? How do we make money, et cetera? Well, we work on a performance basis and a management basis. So we have a management fee of 2%, which is standard in the industry. And then a lot of people, especially in digital assets, will try and increase their performance fees because they know where this thing's going. We've kept it at 80/20. So it's a very favorable offering to you because you get professional management, algorithmic trading, really a passive hands-off vehicle for digital asset management while keeping 80% of the profits. That is a fantastic opportunity for LPs to be able to tap into. And so, like I mentioned earlier, BitGo is our custodian for these digital assets for our longer term holds, et cetera. So they're protected. But we also have a platform called Nav, and they manage billions of dollars under their platform. So you get real time reporting, real time insights in a portal, et cetera. You can do more due diligence on that if you want, or you can go ahead and book a time with us and we'll tell you more about them. But that's where you'd be able to see your reports, anything from your taxes, anything regarding the fund's financials. They're reviewed there. You're able to see it transparently at any time. Okay. So here's my contact information if you do want to invest alongside with us, or you can scan this QR code and book a time. Now, on this webinar, we're actually allowing the next 5 individuals that want to come in that necessarily don't have the 250,000. If you want to get started with 100,000, we will make a arrangement, a side letter agreement for you specifically if you wanted to deploy that capital into the fund this week here with us. We will get you the information. We'll craft that side letter. That way you can get in with less capital than our typical minimum requirement. So scan this QR code if you want to book a time with us, and we'll go ahead and tell you the information. But now we're going to go ahead and open it up for Q&A. And so if you've had questions during this webinar, go ahead and drop them into the Q&A chat here. I'm going to go ahead and review them, whether they're for me or for John. Please let us know. I'm sure some of the more of the institutional stuff will be for John, or will be for myself if it comes down to the trading. But definitely drop your questions in the chat here, and we'll go ahead and get that answered for you. And so real quick, John, as they go ahead and drop their questions, just to even kind of wrap up why you wanted to start TRU Capital and why you wanted to join it, what made you leave BlackRock and really dedicate your time to doing something like this alongside me?
Yeah, so I think for me, I've been very passionate about digital assets for a long time, and I've been looking for the right way to get into the space. Like before I worked at BlackRock, I worked on a startup in the Web3 space. And that was a great learning experience, but it wasn't the right product market fit, and it wasn't really the right way to do it. I think the opportunity here, and what's exciting to me about TRU Capital, is an opportunity to partner with people who are, they understand the value of digital assets and they want to get exposed to this space, but they want to partner with someone to do that in a way that's going to, like I said, protect them from a lot of the risks and pitfalls and predators that are in this emerging asset class without having to sacrifice the opportunity for the upside here. And one thing I think that I'll just throw out from my experience that really kind of helped me, just like think about this. There was a time, I think this was like February, I want to say, of 2023. But there's a guy who was the head of factors analysis in institutional systemic research for BlackRock, named Andrew Ang, and he put out a white paper. It was about 50 pages long that he'd worked with a number of partners on. But in that paper, he said that if you thought that there was a 0.016% chance that Bitcoin finds what he called it a bliss state, which is like a fancy economics term for a lasting role in the global financial marketplace. He said if you accepted that thesis, a rational investor would allocate 20% of their entire portfolio directly to Bitcoin immediately. And as that percentage increases, that likelihood, he said that a rational investor would invest even more, according to modern utility theory, modern portfolio utility theory. That was the most bullish thing I've ever heard. But I realized that as this asset grows, right? Like, it's much closer to 1 million now than it is to going to zero. And like Michael Saylor said, it's either going to 1 million or it's going to zero. As this asset class grows, there's a lot more noise in the space. It's a lot more confusing. There's a lot more investment opportunities. There's more stable coins, more everything, more altcoins. And so I think what I like about this offering is we're going to be able to help people partner with them as they get into digital assets, and make investments and allocations. We want capital that understands that long-term thesis. We want partners who understand the long-term thesis, that aren't looking for, immediate entries and exits from the market, but who want to be exposed as this asset class grows. And then the key thing about TRU Capital for me that made me like this is, I think, you and I went back and forth about this when we were initially putting this together, but the algorithms, the institutional grade trading algorithms that backstop the fund, give us a great relief of mind, because we're able to get returns for our investors and still accumulate more assets, even if the market is going sideways or down. That's a big differentiator that a lot of other players in the digital asset space, I don't think, have found a reliable way to do that without taking on a lot of unnecessary and really detrimental risks. So those are the things about TRU Capital that got me excited, and why I think that this particular offering into the marketplace is going to be so valuable and so well received. And that's why I decided to leave BlackRock and to focus on this and go full-time crypto, as they say.
Yeah, absolutely, man. I appreciate you sharing that, because it also gives, exposure to, the caliber of what it is that we do have. I know a lot of people that may have registered have met me in person, or maybe know me from other ventures and stuff. And it's really cool to see when two great minds, and more minds, as we have other people in the fund as well, but come together, see the same opportunity in said market, and are aligned on it. There are so many people in this sector, in this space of digital assets, that fall for all the noise. And I've been in digital assets for a long time, and so is John, as he's mentioned. And we're very aligned on a lot of the ways that we want to allocate, and that's very rare. You see a lot of people chase in this space, and that's not something that we necessarily want to do. And a lot of people that I've spoken with, even before having the fund, were confused about, should I buy Dogecoin? Should I buy Litecoin? Should I buy this coin and this coin? A lot of which of those haven't moved, except for Doge, because Elon just, created Doge, which is kind of crazy. But if you think about it from a real utility standpoint, there are things with real fundamentals that people overlook because of all the noise, and then they end up losing their money because of it. And that's one of the reasons that I wanted to start TRU Capital, was to not only, help people, but really stop the unnecessary investment into bad projects, because I don't think that they really deserve it, and they're just kind of taking advantage of blending in with the noise. And it's not really something that I like to partake in. So with that said, I do have a couple of things here, a couple of questions that were submitted. So thank you for submitting those. And if you guys, again, do want to go ahead and learn more, speak to our team about, joining the fund, you can go ahead and scan the QR code and speak to us here. But we have a question from Roberto, and Roberto asked, what is it about digital assets and this sector that you see that is poised to a price increase? Basically, what he's asking is, why digital assets over holding Bitcoin? And because Bitcoin has obviously done well over the past few years. So, John, do you want to take that question?
Sure. Yeah. I think the way I would frame this is that, um, let's just let's take this at a high level, but kind of narrow this down a little bit. Um, I took a course at the Wharton School of Business on the economics of blockchain and digital assets. And the idea of that course was to not only explain some of the technology, but to explain some of the economic circumstances that drive value to a digital asset, a token, right? In the case of Bitcoin, through a long history of the community kind of going back and forth about these things, Bitcoin has been kind of chosen and designated as a digital store of value with programmable scarcity and a fixed block size. However, there are a lot of other applications for this technology that Bitcoin is not perfectly well suited for. And I think another example for that would be stablecoins, right? So within the broad I guess, designation of money, there is capital and currency. And people kind of generally understand the difference between those things, like real estate capital or capital you invest into a company, or Bitcoin, which would be a store of value, capital. But then currency is a whole different area of money. Well, there are different digital assets to address each of those needs in the market. Bitcoin is addressing a multi-trillion-dollar need, but currency, stablecoins, is already a over $200 billion market cap and rapidly growing. So those are just two examples of how different digital assets address different market needs. As you go on and expand from there, there are a lot of different. I'm not going to go into all of them right now, but there are a lot of different use cases for digital assets that are finding product market fit. And that's part of what the market is doing right now, is that there are a lot of needs that are being met, and different products are trying to meet those needs. And a lot of them have a digital asset associated with them, a cryptocurrency or token. And as they find product market fit and bring in more users, that drives adoption and that drives that economic value there. So the problem with only being allocated to Bitcoin is that you then miss all these other potential use cases and applications for digital assets, which I think if you look at the legacy market, say like, you use an analog of gold for just a pure store of value that gold's doing, that's, a $1 trillion problem, multi-trillion dollar, $10 trillion problem, right? That gold is solving for the market. However, gold is not solving the same problem that Google is solving, that Microsoft is solving, that Ford is solving, et cetera, right? And so you're going to see that same thing in the digital asset space. So only being allocated to Bitcoin means you're going to miss multiple trillions, quadrillions of dollars of market that are going to be created in the digital asset space. So I think that the risk here is not in being allocated to digital assets as they grow. The risk is not being allocated, because then you're guaranteed to not be able to participate in that market share as it expands and grows into the future.
Yeah, very well said. Very well said. And that actually leads into this another question that we just got, which is, are we investing into like ICOs and VC type of projects, stuff that isn't listed on exchanges? John, if you want to answer that one as well, I think that's right up your alley about our institutional type of research that we do on these projects.
Yeah, so I will say that there is going to be but one of the second priorities of this incoming administration is going to be laying out what they call market structure. So like clear and well-defined definitions for digital commodities, digital securities, digital collectibles, as well as the requisite steps and paperwork to file for and create those in the United States' jurisdiction, international jurisdictions. So once that market structure is put into place from a regulatory perspective, I think we're going to see a proliferation of digital asset projects in a number of ways. I talked about this a little bit in the panel I did on venture capital and digital assets. So I think that is going to be a growing area, and there's going to be a lot of opportunity there. In the future, that may be something that Robert and I explore with a different vehicle. That's not the intention of TRU Capital. The intention of TRU Capital is to say that we want to be allocated to a lot of these digital assets that already have, Lindy effect, proven adoption. They've been in place for 10 years. Like Bitcoin hit a $2 trillion market cap. There's no asset in the history of financial markets that has ever reached a $2 trillion market cap and then collapsed to zero, right? So the idea is to not miss these already proven things. And then for a lot of these other things, there's going to be a lot of noise of things launching I think it's going to increase. In the 2021 bull run, we saw an expansion from 300,000 digital assets to 3 million digital assets. Coinbase forecast that by the end of 2025 we'll be at 100 million digital assets. We're currently, I think, at 40 million digital assets in the space. So there's a lot of things launching. It's easy to like go out and try to find things in there and then get that wrong, right? So our first target right now is to focus on things that are proven use cases that are going to be part of this expansion of digital assets. And then as things come out of that ICO phase, those launch phases, and emerges, finding product market fit and lasting value, we may evaluate investments at that point. But short answer is no, we are not seeking things for ICO or let's say unproven things at the moment. Not for this fund anyway.
Yeah, absolutely. And one of the things that piggyback off of that, we have whenever we enter positions, there are targets that we look for when it comes to entry and exit. If we are taking advantage of something that is a little bit more of a spot position in a cycle. So, like for example, Ondo, even though we're very bullish on that, I had a perspective of more of a, I don't want to say short term, but what happens in this miniature cycle, and then we also have our long-term projections for that project as well. I showed you guys some of the trades that we took that I did very well with on the Ondo side, and a few other projects as well. But those are things that can be, right next to each other. They can be, we can have short-term forecasts and long-term forecasts, but the liquidity requirements in order for those to actually occur have to be there for us to have short-term and long-term. So we won't touch anything that's under 50 million in market cap, and that's really the bare minimum, right? They have to have certain exchange partnerships in order for us to partake in, not just from a registered fund perspective, but also just even we've seen projects come and go. When I first got into this asset class, there were about 3,000 to 13,000 projects. Now there's millions of tokens, like millions and millions and millions. And a lot of that has synthetic value, meaning that they can artificially create the value inside the project to manipulate the metrics to give newbie investors the illusion that this thing is actually taking off, when in reality it's just a market making activity that John and I really sniff out. And so the amount of projects and the ease of being able to launch your own has really been enabled due to AI and even just some simple tools and the Solana meme craze that occurred. But there is extra due diligence that's required in order to combat the amount of tokens that are coming into the space, which is why going at digital assets alone is not really the best idea, and why I don't even do it. That's why John and I have collaborated, and we have other partners in the fund as well to do so. And so that actually kind of goes into the next question. We just got a question here: is what are some scams to look out for and how to avoid them? I have a few right off the bat that I think I'll take a swing at, and then John, I'll pass it to you. Um, but I want to know who asked that question because it says anonymous attendee. But the biggest ones that I always see that are super easy to just not carry through with are ones that charge you a fee upon the trade execution to buy their token. There are many projects that will try and charge 2%, 3%, 5% just for you to acquire their token. And that fee, they say, will go to said network. But when you run the numbers on the analysis of that, you have to have a way higher return because they require it on the buy side and the sell side. So if they take 5% on the buy and 5% on the sell, that's 10% if you don't have that project move at all. If you try to just buy in and then sell, you just lost 10%, right? So your return profile has to be higher to enter those projects. Even if it's an emerging sector, it's one of the biggest red flags that I see when it comes to projects that are more than likely on that radar of being a scam. John, I'll pass them off to you for scams to avoid.
Yeah, I think the simplest way that I would say this is that if it launched on pump.fun, it's probably not investment quality. But scam is kind of a hard word to define. What I would say here is that you should be able to do your own research and be able to find out who's on the team, who has an investment in this working out, what's their use case, who's their competition, what does success look like. There should be some kind of roadmap, white paper, transparency on who's been allocated coins pre-market, right, and how much and what the lockup period is, and if all that's anonymous, or if it's all 90% of it is in one wallet. There's just some things to look out for. But it really should be something where, like, just like anything, any business, any investment that you're evaluating, um, I think you should be able to get a lot of clear information about the project and about the offering. And if you're not able to get a clear answer on some of these things, then that's a potential red flag to look out for. So yeah, I would just say, like, how transparent they are about their project and their offering is a good thing to kind of use as a rule of thumb for trusting a project or not.
For sure. Disclosure, 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 disclosure. I have not only from, the companies that I've ran, but also even going through the legal process of launching True Capital. There are so many legal requirements for disclosure pre the Trump administration that were required in standard investment vehicles. And we're going to see that happen with digital assets. We're going to see a huge disclosure requirement upgrade, if you will, for a lot of these projects. And so when they don't have proper disclosures, or if their terms of service isn't updated in a couple years, or even if the thing on their website shows 2022, those are more than likely projects that aren't being maintained because at the end of the day, these tokens, if they take off, they're real businesses. They are not just token projects getting launched on Pump.Fun. So there's a lot of operational IQ is what I call it, operational IQ, that you have to be able to continue to stay not only relevant in market, but just simply up to date, let alone the technology being developed. There are things that have to be done in order to have investors be attracted to projects. And so the ones that essentially do that versus the ones that don't are a clear indicator of if they're falling behind or if they're not. And it's simple things like that that obviously people can do to beef up their regulatory compliance and just their investor appetite. But you'd be surprised on how many projects don't do it or they don't think it's important. And that's just really because they may be not business operators and they might just be the tech nerds, which is totally fine. There are places for tech nerds, but if you're looking for something institutional, you want to have people that you can trust that go through that additional layer of due diligence, security, et cetera, to weed that out. Great question, by the way. Great question. We got another question here, which is along the lines mostly of memes, and I don't want to have this be like a meme coin craze type of panel or anything like that. I do want to respect obviously everyone's time here. But what's kind of like the sentiment analysis with memes? Because there are obviously some that have taken off. And why do we choose not to participate in those is kind of where this guy was alluding to, even though there's return and alpha there sometimes. Why do we choose not to invest into meme coins into projects that maybe are very culturally viable?
Sure. Yeah. I think the key word there is invest. I think that even though, like, let's just use Dogecoin as an example, right? Like, obviously that has found, a lot of adoption. I think, well, so first, to say this more broadly, I think mimetic investing is a major trend in financial markets right now. And I don't want to sound glib or flip about that. Like, I think that there's a lot of people who are buying things like AMC or GameStop or, gambling, sports gambling, or meme coin investing that are trying to take as big of a risk as they can to try to get a reward. I think that there's, a marketplace there. I think in crypto, it got up to around $150 billion of market cap, all the memes together. So there is a market for that. However, I don't view it as investment grade because Doge, for example, even if Elon Musk adopts that as part of his X platform as a payment solution, the tokenomics of that project are still such that any investment that you make is going to get obliterated. So it's really only fit for purpose of, like, some silly internet use case, but that doesn't mean it's an investment grade asset, as opposed to Bitcoin, which is, digitally scarce and going to retain its value long term. As measured against any fiat currency that you want to use as a other side of the denominator there. But there's just with a lot of these like meme projects, some of them, to their credit, are trying to create ecosystems and lasting economic value there. But that isn't really the investment thesis that True Capital has, and that's not really what I view as investment grade. Whereas, things like Wisdom Tree, BlackRock, Bank of New York Mellon, all building and transferring their existing businesses into the digital asset space, that's the next century of global finance. And that, to me, is the investment that I want to be seeking. If you want to allocate capital to try to get involved in meme coins, I think that's, your decision, but that's not really what our offering is or where we're focused.
For sure, for sure. And along that same thread, we actually just got another question of someone saying, "Hey, I feel like, crypto." This is actually from Ian. He said that it may not be all about the actual tech, but more about how it's affected with the mass psychology, the social media trends, and that kind of stuff. So, how do we trust the value of something that can switch overnight because of the swaths of manipulators or potentially stuff that's AI backed, right? And that's a valid point. And again, what it comes down to is investing, right? The investment thesis behind why you're allocating to a project. If it's just because, like John said, the social media trend is there and you have your price target in and out, that might move very quickly, right? It's sort of like the approach that Warren Buffett would take to his projects or his investments, where you need to be able to want to buy that thing for 1, 2, 3, and in his case, a lot of times it's 10, 15 years because they're more companies. But if we have the firm belief that a token or a project is able to sustain market cycles, and we ask ourselves, like, would we buy this if we went down 20% on the project? Would we still hold it or would we even buy more if that occurs? And if the answer is no on a lot of those simple checks and balances, if we look at the downside risk of it, if we still wouldn't allocate towards that project, then we won't. But if we still would, because we know where the fundamentals are going, we see all the developments that are occurring, and they just need a social media campaign, that's not going to stop them. Now, Ondo was one of those projects. Okay. Back when it first launched, you saw nothing on their social media. You saw nothing when they were developing out. I think it's the Nexus project, which I know John has told me a lot about behind closed doors. There was a lot more developments that happened before they started doing all their PR announcements, their summit, their marketing ramped up rather quickly because they had the fundamentals, the partnerships, and they had the product ready. And so, to answer your question more directly, if we are taking more of a investment into projects that we think will have a great PR run after they build product, they have to have the right partnerships. And a lot of times that's not disclosed extremely publicly. You have to be in the know, you have to know people. I know John knows a lot of people that work at BlackRock and these institutions as well. And so there is a mini bubble inside of this entire landscape where a lot of the high level decisions and the high level things that are being talked about don't reach Twitter fully or don't reach social media marketing PR campaigns until 6 to 12 months later, where positions have already been placed. And so that's really our approach, not necessarily just finding the projects early and waiting for a PR campaign, but really looking through our questions that we ask ourselves prior to investing and saying, is this something that we see strong fundamentals with that will outlast the 4 year cycle, or that will stay standing because of its partnerships? And when we showed the real world asset sector on one of the slides, it was the only thing that held up value compared to everything else got destroyed in a recent pullback. And so when you see fundamentals that are strong like that, you see decoupling against the typical crypto pump and dumps to real utility with real fundamentals. And that's where you see the true projects really shine. It's a good question, Ian. Good question. Okay, cool. Last call for some questions here as we wrap up. Again, guys, if you do want to get involved with our fund, go ahead and scan this QR code. That offer that I made earlier about getting started with $100,000 is still on the table. I did see we have a few booked appointments that came in. So if you are interested in doing that, you definitely want to scan, book a time in before those slots get taken. And that way you're able to join us potentially with a lower amount. But with that said, guys, I appreciate you hopping on. Doesn't look like we have any more questions, so we're going to go ahead and wrap up our Q1 report and our Q1 webinar here. So thank you guys for your time. Appreciate it. We will be sending the recording and we will be sending that Q1 report that we put together because you guys stuck to the end. So thanks again, Arun, Dragon, Gene, Ian, Josh, Thomas, Welma, and the others that are on. Thank you so much for attending, and we look forward to seeing you guys here soon and potentially on the call. Have a good one.